Hi there, it's Bill with Smart Trades, and it's Tuesday around 9:20 Pacific time. Um, anyway, just a quick update on the S&P and the count that I had previously put up there has been blown out, at least on the short term. So let's revise it a bit. I had originally called for this to be a third wave, and then we had a fourth wave triangle, and it appears that indeed that was rather than a third wave, rather it's three of three, so to speak. And so let's just move everything over one notch. And I think the count is still plausible, but obviously it's moved a little higher than I initially expected. I did post that we had an ABC decline here potentially off of the high, and warn that if you were short, you should bring your stops to break even or better, and not ride this up to new highs, but wait for new highs if indeed you want to get short. So at any rate, the new highs are here, and I still believe the count is valid. We have both momentum divergences based on the ADX and breadth divergences based on the advanced decline line. Nonetheless, both of those indicators are still heading up, so there's certainly no hurry to get short. Indeed, I'd be a little patient here and look for a small degree fourth and fifth wave within this rally, and also to look for these indicators to pull over a bit, or wait for the market to actually make its turn, which is what I generally do, at least on a smaller scale. And here's an alternate count that I presented before. I don't necessarily favor this, but again, I think it's worth having in the back of our minds here as a possibility. And one of the main reasons that I think it is important to take a close look at this count is the very similar magnitude of the wave 2 and wave 4 corrections. This count is far from ideal. I think it's plausible in that there's a bit of alternation in terms of the complexity of the two declines, 2 being a little bit more complex, and the possible 4 wave here being more simple and straightforward. But both of them are basically zigzag type patterns, and so that's marginal alternation. The other possibility is that, as mentioned before, that this decline is actually A, and the rally we're in, rather than being an impulse wave, is actually B, in which case we would slide 4 over, and we've got one more decline to go. Whether this is an impulse or part of a correction, I actually still favor that scenario, but if we get through the 1159, 1166 area, which is the next resistance, the way I see it, I would be alert to the possibility that we've got more to go on this particular leg. So let's watch it carefully here. A moderate new high doesn't ruin the possibility that this is a B wave high and that we've got one more leg down to complete this corrective process. But we don't want to see it take off too far. The probabilities will decrease. Anyway, that's about it for now. Hope you're having a great day, and that's it. Thanks. Bye.